Welcome back to another video. I'm here with Peter. A lot of you may know him as Einstein of Wall Street. He's been here for 150 plus years at this point.
137. I'm capping out of there.
At this point, you guys basically mostly know everything about him, but at boot camp, a lot of people were asking me specific questions, and I decided why not come here and meet up with Peter and ask those questions that you guys were wondering about. First of all,
he flew into New York just to come hang out with me and George
Exactly.
Washington. I was out on the corner.
First of all, people were asking, because they know how you started. We talked about that on my channel a lot. What's the main difference between retail trading and being here at the exchange?
Okay, well, there's a huge difference. So retail trade, there's a couple of different kinds of retail trading, first of all. So there's almost, I call it almost institutional retail trading. So when I started, I came down to the floor. I started as a teletypist. That was how I began my journey here, right? And that was way back in the day before any technology, right? And then you've got a retail trader in a brokerage firm environment are basically retail orders. Those are small accounts, probably, a family account opens up at Merrill Lynch with Barney, JP Morgan, and you're trading 100 shares of this, 500 shares of this. So in a brokerage firm setting, that's what you call a retail trader.
Okay.
Now, in the new world of day trading, you have to realize in the 80s and 90s, this wasn't going on. What you guys are doing, right? Day trading the market, scalping, whatever it is, which we call retail now, it didn't really exist, right? You have to be a, what's the word? I keep forgetting it lately. A certified trader, what's the word? Why can't I? A accredited investor, right? Which meant that when you opened up an account, there weren't free trading apps. There weren't free trading apps before March 2020, right?
Yeah.
So you had to be an accredited investor, which meant if I wanted to open up an account at Merrill Lynch, at Smith, I'm using old firms that don't exist anymore, but JP Morgan, Charlie Schwab, whatever it is, you had to prove that the money you invested in the market, if you lost it all, would have no impact on your standard of living for 5 years, right? So there were these preventive guidelines on people getting involved in the market. So as much as that was a way to protect people from not losing money, it was a way of keeping this very exclusive, right? So I'm not sure what the biggest motivation was.
I'm not sure what my affiliated broker Moomoo is thinking, but they're giving my audience 30 free stocks for a qualified deposit. And let me tell you, I've never heard anybody giving 30 free stocks for a qualified deposit. So I would go take advantage of that. As you guys can see, I do use this platform every single day. It's not something that I just promote. I trade there on my live streams. I use it on my YouTube. So I know a lot of you guys always ask what platform I'm using. Well, Moomoo is the platform that I'm using. And they're giving 30 free stocks. I don't know if they meant to do that. And if they did, great. If they didn't, let's take advantage before that's not a thing anymore. So click the link down below. I'll put it somewhere on the screen or in the description. And go enjoy those 30 free stocks with a qualified deposit, because you were going to make a qualified deposit to any platform you were going to use anyways.
But we don't want you to play it. They come to this party because you're not cool enough. You don't have enough. Yeah, that's how you right. If you wanted to trade in the 80s and 90s, you couldn't just open up an account with $1,000 or $5,000. I think it was probably a minimum of $5,000. But then you had to follow those. You had to get full accreditation. Like now, if you trade like pre-IPO stock and all that, you have being an accredited investor is the nature of this business.
Yeah.
And then you've got, and then Webull and Robinhood came along, and suddenly everybody with an iPhone and $100 could suddenly trade the market.
Correct.
Right? That was a brand new concept. So that's what we call a retail trader. So
that $5,000 thing is something that I just learned. So I mean, not the 5,000. You had to show that it wouldn't affect your
standard of living for the next 5 years. If you lost it all,
okay,
you would have to prove that it would not affect your. They were protecting themselves.
Exactly. Yeah.
Right. It was a way of the brokerage firm going, well, you come because people were not as familiar with the market.
Correct.
There were the people who traded or invested. Right. You gave your money to a financial advisor. You had a 401k or whatever, and then you hoped you didn't lose money. But what they were trying to protect themselves against was somebody who had been given this idea that this was a get-rich-quick scheme, that they were only going to make money, they weren't going to lose money, and that they didn't want somebody coming back and saying, well, you told me I was going to make money. I didn't know that the economy was going to go down the tubes, and my 5,000 is now worth $480, then I'm really angry and I want to sue you or something. So that way they kept these guidelines.
Got it.
Now a retail trader is somebody who is scalping the market, who's day trading the market swing. It may not be day trading, but it's swing trading, right? And option trading. So that's a retail trader. We don't do that here, okay? I mean, I am restricted by what stocks I can trade as a broker here on the floor. I don't do even the retail trading I just described to you any longer. Okay. When I started here, I started as a teletypist, I became an option clerk, then I was a retail clerk, which meant I was connected. Every brokerage firm had a retail desk, which were the smaller accounts.
Correct.
Right, the $50,000 accounts, the $100,000 accounts, grandma's, retirement fund, whatever it was. So now a retail trader is a scalper, day trader, swing trader, a short-term trader. And you don't open up a day trading retail account with Charlie Schwab or you may, or TD Ameritrade, you may do that, but it's sort of restrictive. What, are you going to call your broker every time you do it? Or, man, I'm sure you can probably do it online. Yeah. But you know me, I'm not that technologically savvy. But now if you want to be that kind of a trader, you do what you do. You open up an account. You have it with TD, you have it with Interactive Brokerage. You have it with Thinkorswim, right? You're able to control your own buying and selling, right? So that's a retail trader, right? We don't do that here, right? What we still do here is institutional trading. I do some of that stuff within the SPY trade, right? Oh, shit.
What's going on over here?
So there's a historic, when somebody retires from the floor of the stock exchange, we do what's called a clap off. I'm actually supposed to be down there for this.
Sorry.
That's okay. I'll go down. But anyway, yeah. So the guy who's retiring is an amazing guy. He's probably been down here almost as long as I have. Right. And his name is Michael Crane. And he sort of he was a supervisor. He ran all of operations for years and years and years. You know what? Let me go down there. I'll be back in a minute.
Take your time.
So your idea of a retail trader is basically someone who is using Webull, Robinhood, a TD Ameritrade, Thinkorswim, whatever it is, Interactive Brokers. Somebody who has control over their trading thing. You're a retail guy. Retail just meaning small. Okay? So we don't day trade here on the floor, right? I do. I'm probably one of the only guys who does that. It's based off of a strategy I built many, many years ago. But basically what's going on here now is the floor of the exchange is basically where we source liquidity for larger trades, right? Like 100,000 shares at a time. Even though still you'll see the way the handheld is, most trades. So in the old days, you used to thrive for, a small trade was 500 share lots. I think that was probably the minimum we'd do. 1,000 shares. That was a retail trade. I'd walk into a crowd, and I'd say buy 1,000. Right? And so you do that. And you maybe buy it from one person, you may buy it for 3 or 4 people. Small. And then obviously the goal is, by having a market maker and the auction market here and liquidity, is to try and put on a big trade. That's what our goal is. Right? So, to put on the 5,000s, 50,000, 100,000 share, million share trades. I mean, my biggest trade I think was I put on an 8 million share cross once. That was basically, I had a buyer of 8 million shares, and we spent a number of hours searching the other side of the trade. So there's 2 ways, or probably multiple ways, of executing a large buy position or short position, right? You can just go into the marketplace, and I can sort of, buy 50,000 here, 50,000 there. It's a poker game. I sit back in an active crowd, and I'll pick where I want to buy stock. Correct. Or I can buy a little bit here. There's many different strategies. Right? In the electronic market game, I can buy 50,000. Let's say I had $500,000 to buy. Based on the instructions of the customer, he may be buying them on news. He wants to be aggressive, just go buy them. He may want to buy a couple 100,000 in line, meaning in tight, right? And then work the rest of the order over the day. He wanted to get a little under his belt. So there's so many different instructions in a larger order. That's not the way you do business, right? You're there, you get conviction about a trade, right? Whether it's what Rocky said, there's 70% probability that this is matching X data that shows that this, the last 70 times this has happened, it beat the market 50% of the time, and so you do that. It's not an institutional mindset. An institutional mindset is me buying a large position, trying to get into a stock that I may hold, whether it's for a hedge fund or what. I mean, think of, it's important, I think, from a retail perspective, to think about the big whales, right? The way they get into shares, the way they get into larger positions. But so, you asked me the difference between what we do here and what we do there. This is institutional trading. Basically, we get an order on the buy or short side. We try and find the other side of the trade without ever having to go to the market. Because there are people who are searching out there, look, like you, for instance, when you have a momentum trade or you're seeing unusual option activity, right? You're looking for me, what I'm doing. And that may help you give conviction, right? If I buy a stock up, right, you're going to notice that, and that's going to make it maybe cross, a trend line or whatever it may be. So, we are still interacting. You're probably interacting more with me than I am with you.
You're more of a use to us than we are to you.
Absolutely. And so that's the difference.
Cool. And just back to that, when you say, clients call you and maybe give you instructions on something that they want to do as far as buying.
Right.
Will you ever call back or maybe on the phone advise them a different way to do it better? Or do you take those instructions and you just go with it?
Every customer is different.
Okay.
Right? And over time, that's changed a lot.
Okay.
Like in the old days, I would get an order. The first question would be, here, take 50,000 to buy of IBM. Give me a look. Buy me 5,000 right here, and then give me a look. I'd walk out to the crowd. I mean, this is old days auction market.
Correct.
I'd walk into the crowd. There'd be two buyers. I'd say, Joey, how is it? He'd say, Pete, there's a guy that you got two buyers bidding a quarter for 50,000. There's a seller at 3/8, seller at a half. What do you want to do? I said, you know what? I'll buy 5,000 right here. I'll bid 3/8 for 5,000. One of the sellers may say, sold you 5,000. Then I'll pull back and I'll go back to the customer. I'll say, you know what? We got two buyers. We'll pay a quarter. My sense is they can probably pay better. They may be able to pay 3/8, and then we got a couple sellers at a half. If you want to buy all your stock, you can pay a half for it. And then I scope out I'll even say to the buyer, I'll tell everyone, not all the time, I'll say, guys, I got 50 to buy. My guy's being a little weary of the market. Market looks like it's coming in. If I pay 3/8, do you guys go along? And I go to the sellers and said, do you guys sell stock lower than a half? So that's getting a market. Okay. I want to see where the bodies are buried.
Got it.
Right? So that's the information. So in that case, the guy may have one idea of what he wants to do, but once he sees what's in the market, he may change it. Okay. He may think I'm walking into a market, nobody's interested, nothing's going on, and I just want to work the order, or I want to be aggressive. There's so many different reasons why somebody, now we don't know what his ideas are behind it. I mean, back in the day, did I go to him and said, "Oh, is this setting up? Is a technical trade? Is the market hitting resistance? Do you have a good level of confidence? Blah blah blah." Whether that happened on the way of him getting the order, maybe, right? Portfolio managers had different reasons. Very often was not technical. Right? Some of it may be fundamental, some of it may be technical. I don't really know.
Got it.
But that was the key of the auction market, was the banter back and forth. When I'd say to him, you know what? I feel like these guys are about to get aggressive. So yes, in answer to your question, I would very often give him input about what's happening in the crowd. It wouldn't be based on the information that you use to trade. It would be more a feel of what's happening in the crowd.
Correct. And then the way you're saying it is more in slow-mo because you're talking about basically negotiating back and forth.
Right, exactly.
How fast is it in reality versus the way you're explaining it? Because I know you're trying to explain it,
right.
But is it fast?
Oh, it can be fast. So
Okay.
very often, it got to back in the old days, it was a much slower engagement.
Okay.
I bought 5,000, I raised my hand, a squad would come running over. This is the workings of it. Squad would run over, I'd say, take this to booth AA. He'd run in, the clerk would look at it, you bought 5,000, I'd give him the market on a piece of paper. That's why we had paper all over the floor. There'd be your order where I bought 5,000, and then there would be a quote paper.
Correct.
And I would say, 2/4 buyers, seller at a half, may have room at 3/8. And he would then get on the phone, he'd say, Anthony, I bought you 5,000 line, it looks like there's blah, blah, blah. And then he would give new instructions. The squad would wait for the response. He'd come running back out to me in the crowd. I'd read it and I'd do what I had to do. Then there used to be these phone trees everywhere. This is before cell phones.
Correct.
Right? So within every 5 or 10 feet, there'd be a tree of 10 phones. I even think the first time you got here, there used to still be, we took a couple funny pictures of us around the phones. I'd go to the phone that was close to the trade, because very often these trades, crowds were really active. Right? Like I'd go into the stock, there was news out, a war broke out. I was buying a company that made tanks or
a
whatever
fight
it
broke
was.
out.
What?
It's like a fight broke out on the floor.
Oh, dude, you have look. I've traded over dead bodies, right? Because you're not allowed to. If a guy dies on the floor, first of all, you can't take the orders out of his hand, and then they can't move the body until the medical examiner comes. So we've actually traded over dead bodies.
It's not a joke.
But anyway, so there are super active crowds. There are quieter crowds. I mean, I can be in a crowd of 100 people trading with someone on the other side of the room, screaming and yelling, and people would always ask, how do you know who you're trading with?
Yeah.
Because those crowds, you've seen movies.
Correct.
They're like, if you look at the old Wall Street movie, which I was actually in, the first Wall Street movie, it's called Wall Street with Michael Douglas, and it's the story of Ivan Boesky. Right, who I almost got a job with before he was claiming that he worked right over there in the corner. He was claiming that he was having premonitions at night about mergers. In fact, he had a guy up at Goldman Sachs who was giving him inside information.
Nice.
So he was part of all of the RJR Nabisco takeover and a bunch of other big retail trades. So anyway, if you see those movies, you will see absolute brawls, screaming, yelling. I mean, it was completely madness. And then you had crowds trading. Then you had one or two reporters in the crowd, not a media reporter, a reporter that was basically putting on the blockchain, the ledger. He was there with an old computer card like your SATs, and he would put, for every trade that went on, he had to make a little card that said who bought, who sold, how many shares, what time, the price, what was the badge number, what company they represented. And every trade from 100 shares to 1,000,000 shares had to be on a piece of paper. He would be sitting there like this. A good reporter was a master. And then he'd put it into a machine that would take it all the way upstairs and it would create the ticker tape.
Got it.
That was how, but even though it was no technology, it went really quickly.
Yeah.
So, that was for me, that was what was exciting.
I'm sure everybody, remembers that and watched a lot of movies to see, a lot of those things happen. Obviously, those times were very intense for different reasons, as far as yelling at each other, trying to jump over each other. What's the difference between how intense it was back then versus how intense it is nowadays? Or is it even intense to you in any way?
Sure. Look, obviously there are not 8,000 people in the room any longer.
No yelling.
We don't have open outcry. Although, if you're here on an opening bell, he's running around like a loony, right? Getting early looks, right? Is there screaming and yelling? Very often on closing, on big imbalance days, we do have a level of it. It was nothing like it was, right? And I miss that a lot. But versus the relevance of being on the floor as a human now, it's as relevant as it ever was, because it's all about the information highway, right? Now, you need to get as much information from the crowd or what's happening in our booth, connecting buyers and sellers all together and doing that. So, what was your question?
The difference between the intensity of back then.
Okay, fine. Yeah. So look, if you're sitting in a room with a bunch of your traders on a boot camp, and you see a trade setting up, and I've seen some of your things, and everyone's going, it looks like support at 92 and a quarter. Everybody all in, let's do it. And then once everyone's in, put a stop order at 89 and a half, and it's going. Buy, you bought your stock, beautiful. All right, now let's scale out a bit. You'll feel that adrenaline. It doesn't have to be loud, but it's that adrenaline and that excitement that you're in a trade. You got skin in the game. You're potentially making or losing money. That's why we always teach people at our place to spend as little time as possible, simulated trading. What do you call it? Paper trading. Paper trading, because there's nothing like the feeling of having skin in the game. You can paper trade all year long, and you really don't ever learn what it's like to be in. We say trade 1 share, 5 shares. The feeling of executing a winning order or a losing order correctly is all it takes. Right? If you do it right, there's no difference. Right, so it's all about discipline, consistency. But you know that feeling when you're in a trade and you're up and you're seeing it tick. I've seen your videos. Right, that's the greatest feeling in the world.
People get mad at me because it's like they always try to play down, like, because there's just so many people online that just try to teach whatever. But like, people say like you shouldn't have emotions when trading. Obviously, you're not supposed to. You're not supposed to, because you have a set thing implanted. Your stop loss, your take profit. So there shouldn't be a sad day as well, like because you have your stop losses,
Right.
but it's still a great day feeling that trade that you planned out and it executed to that level, whether it hits your stop loss or obviously you,
make
want to
money
hit
or
your
lose
profit.
There's a difference between getting emotionally connected to the trade
Correct.
and letting that impact how you execute it,
Yep.
or just having a lot of adrenaline around the trade,
Yeah.
making money or losing money. You know that feeling where if you don't use a stop order and you bought, you're convinced that the stock's going up and you bought 1,000 shares at 50 and you don't have a stop order and it goes to 40, you go get a coffee, come back, it's trading at 48,
Yeah.
you buy a little more, it goes to 46, you buy a little more. You've averaged in to a trade, you're down 10 grand and you're sick to your stomach and you don't know what to friggin' do, and then you bail on it, and the next thing you know, it's trading back at 50.
Yeah.
That's adrenaline involved in the stock, right? If your decision making is based on your emotional, it goes back to the first Wall Street movie where Charlie Sheen plays this young whippersnapper who is working for Gordon Gekko, who is Ivan Boesky in the movie, and they're trying. He did something. He was screwing people over, and so he starts and he goes, "Never get emotional about money, Gordon." It's one of the great lines.
Yeah.
They're in Central Park. It's like a misty morning, and they're trying to get him to sell stock because they're trying to screw him over.
Yeah.
And so there's a difference between excitement, adrenaline, and emotions. Emotions should never impact your decision making, right? That's why you set the ground rules for your trade. You put in a buy order, short order. You set your stops. You don't move your stops,
Correct.
right? You have your conviction, your confidence that this is going to work or not. If it doesn't work, you get out of the trade and move on, right? But if you can't, hope and hype and FOMO are not trading strategies. You can't throw a dart. I hope the stock. You never buy. That's not a reason to buy a stock.
Yeah.
Because I hope it's going to go up.
Correct.
Right. Then you're dead. Or if you're averaging into a trade, you're in a bad trade.
Yeah.
Right. So those are the parameters.
Cool. Do you, building on that, for you personally, do you still ever get excited or have any adrenaline when you're trading?
You can ask him all the time.
All right, cool. So
Look, you
we're
have
on
to
the
realize
same
I don't trade for myself.
Yeah.
But when I'm in a trade and the guy is in the trade because of my strategy,
Yeah.
and I'm long 500,000 spiders, and news comes out that Trump is putting 25% tariffs on Canada and Mexico, and the stock goes down 70 handles, and I'm pooing my pants, and I'm going, and the guy's down $1 million. Yeah, I'm screaming and yelling, going, come on, it's like a horse race, and then I'll have my confidence levels like, am I in trouble here? Yeah. Or is it going to, so we had it happen the other day. That happened last Thursday.
We
were long,
Friday.
Right, we were long. It was $2 billion to buy coming out of the gate.
Yeah.
We got very long. At 2:20, it was 3 o'clock. The market was not going our way, maybe a little bit. And then he comes out with this statement, which is new Trump 2.0, and we can talk about that, because that's what we're going to have to get used to. Mm-hmm. The way information is disseminated in the world of Trump is going to be different. At 3:20, he throws out this tweet that we're going, 25% is being imposed on. Yeah, right, market sold off 70 handles. And I had to make a decision. Not that often do I impart. I will tell my customer why it went down. I'll give him an overview of news, because he's not watching that. He has a different strategy in his mind. He'll always appreciate if I'll say to him, it's sold off on news. And that way he can position himself. But I said to him at that day, I said, this is all news related. The $2 billion to buy once they shake off the news is going to engage, right? Because we had $2 billion to buy for the close.
Yeah.
Sure enough, another 10 minutes, the news didn't get any legs to it, and then the market rallied 70 hands.
I think I remember that. Friday, I ended up losing $13,000. Two stupid candles just came in. Trump was speaking about the tariffs thing.
Right.
I had the most beautiful trade of the day. It was Nvidia just holding up all day. The only only stock that was strong, and I ended up taking a loss on that.
So that wasn't tariffs. That was when he came. He talked about the overnight bank to bank.
Oh yeah.
The bank to bank carry trade.
Yeah.
Right, where banks now, he wants to wipe out the fact that they can charge interest overnight, which is their business model.
Correct.
And the market just went down
sick.
And it never bounced back.
Yeah, it just sucks when you're in a trade like that.
So what happens to you? How do you how do you manage your emotion around
I mean,
that?
in that case, it's nothing I could do. It's I had my stop loss, and I lost 13,000 that
All right.
day.
So you identified how much.
Yeah,
you're
I was
lose.
expecting to lose around that 10, 11 mark. Yeah,
Okay.
I mean, I ended up losing an
A
extra
little more.
3,000.
Right.
Which is okay because we had a crazy week that week, so it is what it is. So, shout out to Trump.
Yeah.
Anyways, something else that people were asking or were very interested in. A lot of us or a lot of people talk about how there are different market cycles. And you have to adapt to different market conditions.
Right.
Some people look at that and say, is this just another motivational talk for for other traders out there, or is this an actual thing where you do have to adapt to certain market conditions, and there are different market cycles. You've been here obviously for a very long time. You've seen market cycles that obviously most people haven't seen.
Right.
How have you adapted to that, and how fast do you end up adapting to those markets? Is it very easy to identify, or are those things, things that still take time for you? Like, how do you get accustomed to those cycles?
Good, really good question. So I'm a firm believer in the world of post-COVID, nothing to do with Trump, in the post-COVID world, everything changed. The way the markets handle everything, the volatility, that sort of fear factor in the market and whatnot. And so, in the old days, fundamental analysis carried a lot of weight. We didn't have the market conditions that have changed that you may be alluding to are a lot of what Rocco said, which is like next day short-term options. Who are the players in the market now? And what are they doing? That's why I always tell retail traders to put yourself in the head of a whale. So in the old days, the big hedge guys were like buy and hold, right? They were not trading. There were traders. There were fast traders, short-term traders, there were buy and hold guys, there were institutions, there were retail people. There were 4 or 5, you could break down 4 or 5 different mindsets of people trading the market.
Yeah.
Okay. So if you try to put yourself in the head of those people, then you can sort of gauge what's happening in the market. Why is it selling off? What's going on now? We're in there are new rules going on. In a post-COVID world, like in the old days, earnings would be coming out in the stock. You'd have 4 of the best analysts will be predicting that the earnings are going to be good with some good guidance. And you knew that if you bought a couple thousand shares before the earnings came out and the guidance, you didn't know what the guidance would be, but you had confidence that the earnings were going to be okay. You make earnings come out, make a couple grand, and you move on and good luck. Now you can have a stock come out with earnings. The earnings can be killer, top line. You can have guidance, top line, and the stock goes down $50.
Correct.
Like, where is that all coming from?
Yeah.
So I always try and analyze, well, somebody is selling. This is real, right? This is not some voodoo shit, right? And so what's going on? Well, that could be any number of things. You've got a lot of the big guys who have been in it for a while. It's buy the rumors, sell the news, right? So there are people who are in short-term options this is actually a hedge for them, right? They may be doing it against the SPY or doing it against the stock or whatever. They may have another position. So they're in the new world of technology, somewhat AI, the complicated trades that are happening. There used to be people who owned stock, who shorted stock, who were long, who were short, and all that.
Yeah.
And then some people options and some hedging. Now there's so many complicated trades out there with so many components that it's virtually impossible to really try and figure out who's doing what. Now what we saw was, I was reminded of it today, so I have a photographic memory. It was right after Davos, the first year Trump was president. He'd been president for a couple of months. Mm-hmm. And it was the first day that he came out and said something about China and tariffs. Right? It was his first bold statement. Yeah. And he said it in a tweet, over a bucket of fried chicken or something, in the morning. And the market went down. He said, we're imposing tariffs on China. It's going to be big. It's going to be the biggest ever. One of those comments. Mm-hmm. And the market went down 1,400 points. It was 11:30 in the morning. Okay, and the market had already been wavering a little bit. And we actually entered bear territory by definition. A bear market is a market that's down 10% from prior close, blah, blah, blah.
Yeah.
By the afternoon, and this is what we're seeing now with Trump, and it's something people should know about the world of trading for the next 4 years, is he's a bully, okay? Irrespective of whether you like him or not, or politics. He'll sort of pick a fight. Yep. It's kind of like the night before a big fight.
Correct.
You know how the guys are at the weigh-in and they're in each other's face, and it's like, you know,
Yeah.
and then once the fight starts, it's different. So he'll lay the groundwork for it. It's basically, and I did this with Dan Ives the other day, it's basically the groundwork for a negotiation.
Yep.
By the end of that day, we were down 1,400 in bear territory at 11:30 in the morning. Within 2 hours, he had changed his position. Maybe we're going to negotiate. Maybe we'll postpone it like he did last week on that Thursday.
His original comment was, "This isn't
It's
a
bold.
negotiation." Yeah, it's not.
It was no negotiation.
No negotiation.
I'm shutting the world down.
Yeah.
And then within an hour, that's why I'm always convinced he's trading the market. Because within an hour, look what he did last week.
know.
It's like, oh, it's 30 days out, and we're going to negotiate, and blah, blah, blah. And so that day, by the end of the day, we had bounced back 2,800 points, and we were actually in bull territory. Bear markets and bull markets used to take decades, generations to happen, and it happened for the first time over lunch.
Yeah.
So that's kind of a crazy thing. So market conditions are changing. Obviously traders use backdate information. That's the whole sense of technical analysis, right? Is looking at how things have happened in the past. I'm throwing all that shit out right now.
Yeah.
It's a day-to-day thing, right? It's the same way with the Fed. We can have, it's where good news is bad news,
Yep.
right? All those things are very complicated. If the good economic news, what happened at the end of last year when the Fed decided to change their guidance about cutting interest rates for 2025?
Yeah.
They had told us we were going to have 6 in the next year. Suddenly they realized the economy's doing way better than we thought, and they decided to cut it to 2, and the market fell off a cliff. That was how we ended the year, remember? And so everyone's going, well, it turns out good news was bad news, because everyone's convinced the only way the market's going to go up is if we cut
lower interest rates,
which is not the case.
Yep.
The lifeblood of this market are earnings, corporate earnings, banking earnings. That's why, or a good, strong economy, that's why markets go up. So market conditions used to work, right? There was always some level of confidence and analyzation of it.
Yeah.
In a post-COVID world, and surely in a post-Trump world, I think we need to really overanalyze these things. That's why we get when you see the market doing things that get your attention, pay attention, right? And be super tight on stops and realize that you can be in a trade for all the right reasons, and for some reason it goes down 100 handles, and you can either lose your prescribed amount you're willing to risk, or you can blow up your account. And we don't want anybody to blow up their account.
What's funny is I started trading in 2016, and obviously that's when Trump took presidency at the time.
Right.
The trade war started, I believe, in 2017. So
I got his first year.
So it's like my first year, and it's first year experiencing the trade war. And it's funny, the difference how it was treated at that time versus now is completely different. We can move on news the very next day and pretend what he just said yesterday doesn't matter.
Like we're doing right now.
Yeah, but versus 2017, news would come out and it's the end of the world for the stock market.
And it lingered for days and weeks.
Yeah,
Absolutely.
Weeks. And you look at a stock like BABA, that stock hasn't recovered since.
Never.
Because of that trade war that
100%.
originally started.
Yes, you're absolutely
So
right.
it's crazy. But speaking of cycles and understanding you're going day by day, do you have a favorite time of when you traded, or maybe the years, segment? Or I know obviously every market is different, but did you have any favorite?
So my favorites weren't based on. I'm a volatility guy.
Yeah.
I'm a volume guy,
Me too.
right? And so my strategies, so I'm not a market cycle guy. I like one time of year or others. I like it. I thrive on chaos.
Yeah.
Right. My mind is most at ease when things are wild and crazy. That's how I work.
Yeah.
Right. It's been that way my whole life, and so that's my default.
Correct.
Is when things are chaotic and full of adrenaline and whatnot. That's when I hunker down. Right. And so it's more. It can be like news out. I used to be that was what made me a good broker in the beginning. Was I was able to, even a good broker can't often handle a lot of the madness.
Yeah.
Like if you used to walk into an active trading crowd, it was like boots on the ground walking into, no disrespect to people who are in the army,
Yeah.
but it was like you were going into war,
Yeah.
right? And because you had to represent your customer and their money, right? And so it would be wild, right? You'd be screaming, and you were only as good as your last execution. Like you could be in that crowd trading, and you just made a beautiful purchase, right? And by the time you got back to your booth, the stock was down $2 and you look like an idiot. And you know, there's always the way the customers are. Yeah. You're only as good. Like, what'd you do that for? And I'm going, well, a minute and a half ago you were telling me I was a genius.
Yeah.
And that's actually how I lost one of my biggest accounts. So you know point 72 is?
No.
Stevie Cohen. One of the largest hedge funds, what Billions is about.
Yeah.
Okay, so Stevie Cohen used to be Stevie Cohen. He was a guy who was trading the market. He was one of my customers. And I used to do business for him. A ruthless guy. He was always right. You were always wrong. And I was trading stock for him, and he told me to do something. And I decided when I got to the crowd, the scenario had changed. And I did something else, which turned out to be right. And I came back to the booth and he called me upstairs and he goes, I didn't ask you to do what you thought was right. I don't give a shit if I lost money or made money. You're supposed to do what I tell you to do, not thinking, right? And I just said, kiss my ass. And I walked out. It's probably the biggest, could have been one of the biggest, because he then went on to be one of the largest hedge fund managers in the world.
That was originally your client?
Well, it was one of my clients, yeah.
That's crazy.
Back in the old days, everybody had multiple clients. So I used to have, he had a clerk on the floor who I used to do what's called $2 business for. Okay. I was one of their commission brokers. And so I was young, I got cocky, and I said, you can't talk to me that way. Like, I didn't know who he was going to become. Look, he did that to everybody. Yeah. You know, the people he's working with now, I don't know if there's any of them who were around back then. But, you know, all due respect, because he's an amazing trader. But, you know, there's always those, you know, the stories of the people who traded this market were pretty wild.
Yeah. All right. There is one more thing.
Sure.
We just had a round of applause for someone who's retiring. Yeah. Do you plan on retiring? How do you see it?
Absolutely not.
Not?
So, no, you know what? I've positioned myself in a way that, so my job and my journey here, I was very, you know, it's morphed into a lot of different things.
It's your life.
The way, it's my life, right? I eat, sleep, dream this market. And so, you know, those people who are not very flexible, who have done what I've done and had some of the journey I had, when things changed, they just retired and walked off.
Yeah.
You know, I was fortunate enough to know that this was a room, and this is my office, a place I never wanted to not come to. 2006, 2007, I was going through all kinds of crazy stuff, and I wasn't making any money.
Really?
And you know, it was the beginning of the financial crisis, and you know, everybody was watching their pennies, and people weren't giving out order flow the way they used to, and everything dried up. Yeah. And I had a wife and kids. I was not willing to give this up yet. And so I just came into work every day for 2 years and, you know, broke even every day. Wasn't even paying my bills for a while. And I just had this, you know, it's sort of a spiritual idea that no opportunity was going to find me sitting at home cowering under my covers, going, you know, like, oh, it's over. You know, I'm a cup half full guy, right?
For sure.
So I would come in every day hoping that I would cross the road with somebody in the business and things would change, which is in fact what ended up happening. One day on the subway, after 2 years of not making a penny, I ran into a guy I had done business with years back. He said, "How you doing?" I goes, "I'm dying. I'm dying on the vine here." Yeah. He goes, "You still have that strategy you used to do?" I said, "Yeah." He goes, "Well, let's start trading." We started trading. We ended up, I was able to walk out of the pit, and out of the dungeons, and we ended up trading for another 20 years together, and it created a great business. So, and then social media came along, and then Wall Street Global Trading Academy came along. And so I've been able to, you know, I realized I have this great platform, and none of this was planned. And I figure I need to utilize this in a good way, right? Like inspiring you and him, you know, and doing stuff on social media, motivational speaking, teaching people how to trade. And so if I was still just doing trading, I don't know what I'd be doing, but you know what? I have so many different outlets now. I'm the new host of this show Going Public, which is super cool. And they want to do a bunch of other stuff for me. I have my social media channel. We have the Academy where we have thousands of students. We speak in Dubai together, right? You know, that's crazy. Who would have ever thought that would happen? You know, I'm going to speak at the Wedbush Wellness Conference in March in California. So, you know, there was a period of time where I did not think I had anything to say, right? That I had no sense of analyzing the markets, you know, or even had anything to write or any ideas about, you know, I knew I came in, I was a good trader, you know, because I thrived on crazy. and I do crazy well.
Yep.
And fortunately, I found, we're always on a journey. We're all, and so it's like you just never give up. If you find something you love to do, get good at it, and then keep doing it like you did, which I've told you more times than not, that one of the most important things is, and it's just a spiritual premise, is that you can't keep something unless you give it away. You found there are a lot of people who got inspired by whoever to trade, made a bunch of money, made it or lost it, and they just sit at home and don't do anything. Yep. You immediately caught on to the idea how great it would be to share this gift. It's a gift.
Yeah.
With other people, and you did that right away, and I've told you that's one of the why I was so impressed with you, and I embraced you, because that's great stuff.
Sure.
If you have created this community like Rocky and inspired thousands, for me, most of these guys don't do what I do. They do what they do and they go home.
Yeah.
Right? So the fact is that to be able to, you guys are the next generation of the investment community. How cool is it for me,
Yep.
right? I never thought this would be my journey, to be able to inspire you to be great traders and help teach you along the way, that I'm the guy in the room who has all this experience, right? And that I can, get off a plane, hop on a stage and talk for 2 hours about this, which I never thought this was going to become what it is, right? And that was a function of COVID and all this other stuff. But think about it. Everybody in the world, there was a time where you all would never have found your way here, right? Or be trading, right? Or have access to the market. This was the party that nobody like you, right, was invited to, right? They kept this shit super exclusive, which I thought, and they still do in a way. And for me, that's crazy. Why not invite everybody to the party? Good people will rise to the top. The bad people will get blown out. And then then you leave a legacy. It's all about the legacy, right? And how cool is it? For me, I love watching you make shitloads of money trading, and then have your team of everybody also learning from you.
For sure.
And it's great to be able to inspire people to get better at what you do than you. How cool is that?
That's cool.
Right?
Life just keeps getting better in different ways than we expected, unexpected.
100%.
And now your son is here.
Right, well, that's for me. I always hoped for that, and I always dreamed for it. I didn't think it was going to happen.
Exactly.
In the beginning, I thought it was a short thing, because everybody down here were all fathers and sons.
Yeah.
Like when I got here, there were 70 market-making firms. They were all family-owned.
Yeah.
They were your grandfather, your father, your uncle, your brother. That was how it rolled here, because who else do you trust with your money?
Exactly.
And then things, there were mergers, people got blown up, blah, 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 and we're the last father and son team here. So the fact that I know he's been running this business for the last 5 years for me. I got sick with COVID and all this other shit. And so that's great. And I love the fact that he loves it. He's a really good trader, right? He's better than me, right? I tend to get more emotional, right? And, and he goes by the book in a lot of ways, and he's good. And he's taken the trades that I've figured out and made them better. Yeah. So that's great.
Like LeBron and Bronny.
Exactly, except you guys got arrested for doing stupid shit, right?
I appreciate you coming on, and
my pleasure.
Everybody's been asking about you, and during the boot camp, it was just funny because I was like, I'm going back to New York, and Moomoo was there, and they were going to the NASDAQ. I was like, I got to stop at the stock exchange.
Good, I'm glad you did. So it's always a pleasure to have you here.
Thank you.
And I appreciate you and everything you've done, and we have a lot more fun to have.
For sure.
Yeah, this is just the beginning. So in respect to your question, if I ever retiring, no.
No, absolutely not.
Thanks, guys.
Appreciate it.